really shouldn't be trading right now.
Frank, you're trading? We're on the beach. How are you even trading? Is that your laptop?
No, it's my phone.
Oh,
We got the mobile version now, remember that?
oh, that's right. It's Finder
Yeah,
Mobile.
yeah.
Yeah.
That's some good product placement.
How did we even get a plane with our name on it like that?
I used the company card.
Frank, what? How much did that cost? Actually, you know what? We're at the beach. Don't answer that. Frank, how many times has that boat gone by?
What boat?
Frank, it's right in front of us, right out in the water.
I don't see it.
Frank, it's passed us like 4 times by now.
I really shouldn't be trading right now.
Frank, you're trading? We're on the beach. How are you even trading? Is that your laptop?
No, it's my phone.
Oh,
We got the mobile version now, remember that?
oh, that's right. It's Finder
Yeah,
Mobile.
yeah.
Yeah.
That's some good product placement.
How did we even get a plane with our name on it like that?
I used the company card.
Frank, what? How much did that cost? Actually, you know what? We're at the beach. Don't answer that.
Attention A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
All right, guys, welcome back to another live stream. Hope you're doing well. Good morning to you. Good afternoon, wherever you are in the world. Thanks for being here. It's a new week, and this week is a very busy one. I'll show you guys right off the bat just what is going on this week. It's pretty big. Hope you're doing well. Thanks for tuning in. As you join, do me a big favor, just hit the thumbs up button on the stream. Just helps out with the YouTube algorithm, getting people in here to check out what's going on in the markets this week. Today's quiet, but that's okay because it actually gives us maybe a day to, I guess, prepare for everything that's going on this week. Let's break it down for just a second here. What we've got is the U.S. Consumer confidence coming out tomorrow. We also have JOLTS job openings tomorrow, which could be big. So Tuesday, decent activity day, but then Wednesday is really the big day. July 31st, Wednesday, is the Fed meeting. So we have a Fed or FOMC press conference and the FOMC statement and some decisions on the Fed funds rate. Expectations are not for them to cut interest rates this time around, but the expectation or consensus right now is that they'll cut in the September meeting, which is just obviously a few months away. So we are getting closer to rate cuts. And I got to say that there is a slight, very slight possibility that the market could see a bit of a surprise here from the Fed on Wednesday. What I mean by that is that there are some people who think that the Fed is actually going to make their first cut on Wednesday. I don't think that's likely, and neither does the market. Although we have started to see some signs that the jobs market is cooling, there's no like red flags, serious red flags going up that I can see. We are just starting to see the economy actually feel the effects of higher interest rates, which is what needs to happen in order to really squash inflation. Now, inflation has been trending lower. So if we get another round of good inflation data and, that would be signs that I think are really a cut in an interest rate cut in September would be really appropriate. So I think that the Fed will likely wait. They probably won't go a rate cut this week. If it happens, it would be a huge surprise, but it's possible. But I think that they will probably wait for one more round of inflation data to come out to really solidify that inflation is coming down. So if we take a look at inflation data for just a moment, you can see where we're at with this. We've come down a long way. Inflation went sideways for a little while, and recently the market has been really excited about the idea that now inflation is coming down again, which is great news, right? We all want inflation to chill out and not be so, painful for all of us, right? Inflation is a painful thing. Prices rising fast is not fun. So inflation on a year-over-year basis, this is the CPI year-over-year reading. We've been seeing a nice resumption of that downtrend in the year-over-year inflation rate, which is good news. The question then becomes, can we see that trend keep going? Can inflation continue to normalize back down towards the 2% level? And I think, although we've had a nice start here to the trend, my opinion is that the Fed is not going to cut interest rates this week. Very unlikely. Possible, but unlikely. I don't think they will. And they're going to wait for a little bit more data. And as long as inflation looks to continue in this momentum to the downside trend, then I think will probably cut in September. The exception is that if we see inflation have just a terrible turnaround really quick, if the next reading, if the next CPI is like this and the next CPI is like this, then they may not cut interest rates in September. But the trend right now seems to be our friend, right? Inflation seems to be trending lower. So as long as we can see, inflation continue to trend lower, there's a good chance, I think, that we see a rate cut in September. So we'll see. So how do you position for that? Well, I've been on the side of rate cuts for most of this year to varying degrees. This year I've spent a lot of it bullish on gold. I still think that gold has potential to stay bullish. So if we're talking gold for just a second, where are we at with gold? Gold started out this year ripping to all-time highs, right? So 2024 started, we went sideways, and then we just took off running and really made a big push to nominal all-time highs. We then made new all-time highs. Then we made new all-time highs just recently. We've come back down since then. Price action has really stalled out up in these levels. And so for me right now, with this consolidation phase, I'm just kind of on the sidelines. There's just other things that I'm trading right now. I've made a lot of good trades, some not so good trades on gold this year, but for the most part, I've been on the bullish side, which has been the correct play. So we'll see if that can continue. To the upside, I do think that, like I said, I think that rate cuts coming will be good for gold. So it is possible that you see something like this start to form. And if that happens, if we see the breakout through the highs, I will definitely be looking for bullish opportunities on gold because I like the setup. I just don't love the price action right now. It's really, really gone sideways here recently. I may be interested in trying again on gold or getting back into a bullish setup if we do get a pullback down to the lower 2,300. I've made several different attempts at this level this year and made money most times. So I bought gold over here. I bought gold over here, which many of you guys might have remembered the legendary turnaround trade. I had some not so legendary trades. I got stopped out over here. I got stopped out over here. So I had some losers and some winners. I caught this area. I caught pre-run up. I was in gold, which took off running. I stayed in it all the way through that. That was one of my best trades of the year as well. So where am I at with gold? Well, I'm not loving the choppy price action, but I am bullish overall. So if we get a rollover down to like 2,300, I'll probably try again, as long as I can find the right setup and confirmation on the Edge Finder. So short term, I don't know. It's really looking choppy. It could trend lower again for a little bit, but I still like the overall setup for bullishness to continue this year. So we'll see. The other scenario would be if we just run up and take out these highs. Like if I'm just wrong about this and we just see this thing, well, not wrong. I am bullish. I'm just not entering a trade right now. If I miss this move and we just run through the highs, then I will definitely be looking for pullbacks to play into on gold. So there's my overall view on gold. The dollar index is also up today, though. So this is a little bit of a pushback for gold bulls because you do have the dollar index trending higher here on the day. So again, here's your 15-minute chart. You can see the dollar has been making a push higher, and seems like we had a little bit of a fake out there on that 104 level. I was pretty shocked to see, or not shocked, but I was pretty excited to see the dollar break that 104 level for the first time in months. And then you can see that ended up being what looks like a little bit of a stop hunt or reversal or fake out, whatever you want to call it. Doesn't matter. I would just call this a fake out, right? Price tried to move lower, and then it was a big whoops, never mind, we're going back. So from here, that's a little bit of price action wise, a little bit concerning. I'm still more bearish on the dollar than bullish, though, because again, I think rate cuts are coming. I think the labor data is starting to cool, right? We've talked about that before, but just for my maybe newer viewers really quick, job openings in the US trending down, right? Unemployment claims have been slowly creeping higher, right? So let's do 180 here, apply. So this is 180 days of unemployment claims, right? Each week. You can see it's been slowly trending higher. Unemployment rate has also been trending higher. So again, I want to reiterate when I show you these data points, these are very low data, right? These are not bad data points whatsoever, but they are trending in the wrong direction, right? Not the good direction. But it kind of depends who you ask. Like the unemployment rate is trending higher, which is good for rate cut, desires. If you want interest rates to get cut, then you want to see unemployment rate just slightly trickle higher. But again, let me reiterate, as I have many times on this show, we're not at crisis levels for unemployment rate. We're just off the almost all-time lows. I think these are near all-time lows. So, unemployment rate just a bit higher now, and there is some concern there that now it's starting to trend in that direction. But again, I don't think we're at red alert levels. So something to think about. I got punked, says Ivan. How so? How did I get punked? Let's keep moving. So in terms of top setups today, we got the Dow. I do want to just remove minor currency pairs for a moment. So let's take a look here. This is what we're currently working with. And if I take out neutrals, we've got kind of a slim watch list here today. DXY lower, but then went higher. Oh, yeah. I don't really have any DXY trade setups right now, except for dollar Swiss. That's the only one. And dollar Swiss is doing okay. Not following quite nearly as, like other dollar crosses are really moving. Like look at dollar CAD, my goodness. Pound USD. Look at the euro. Wow. So anyways, my thought process here with top setups today, dollar yen's giving us a bearish reading, which I thought was interesting. The Russell giving us a bullish reading, 10-year treasuries, Bitcoin, UK 100 is a new one. We got to look at that one. USD CAD and the Dow Jones. So got some bullish and bearish readings here today. I do want to take a quick look at dollar yen. So if we take a look at dollar yen, we are breaking some support structures. But I think for me to short dollar yen, I have to really be in a risk-off state, and I'm just not quite there. So although the Edge Finder is leaning bearish on this one, this is probably not going to be a setup for me. Though commitment of traders data showing some slide the other direction. Maybe some big buying of the yen occurred. Let's look. Let's look at what Smart Money did recently. Let's have a look. So here's the latest commitment of traders data, and wow, they bought the yen heavy. Look at this. Whoa, this is really interesting. So the commitment of traders data lets us look at what institutional money is doing on a week-to-week basis, according to CFTC's reported weekly commitment of traders. So what we see here is on the weekly filing, the latest development shows a huge change in long contracts and a huge change in short contracts. This is really interesting. Look at how much, so they drastically reduced short positions and they dramatically increased long positions. That's pretty bullish for the yen in the short term. A huge net change in the direction of bullishness. But remember that this is also this might be a little bit of a short squeeze or an unwind of the shorts that was, we've talked about the unwind of the carry trade. The institutional money here is very heavily positioned on the short side of the Japanese yen. But what we see in the latest commitment of traders filing is a bit of an unwind in that. You can see a huge increase in long contracts and, even more importantly, a massive covering of shorts. Short contracts got covered aggressively in the latest commitment of traders data. Very, very interesting. Very, very interesting to see that. I didn't notice this. At the same time, they went long the Nikkei, which is interesting. SPX, pound. If you're somebody who watches gold, they sold gold, and they sold silver, sold CAD, copper, Dow, NASDAQ, Russell. Seems like a bit of a risk-off week for the commitment of traders data. Very interesting to see that. By the way, if you want access to this report, it is currently 50% off. And for live stream viewers right now, you can currently get 55% off if you send us a direct message on our website. So right there, click that link. Someone from our team can get you access to a huge discount on the tool. And if you haven't heard about this, also, if you're watching on Twitter, we'll try and drop a comment below this this live stream if you're over on Twitter. What does this mean for JPY? Again, it means that big money is making some bets. This is definitely a bet in favor of the Japanese yen, which could lead to maybe some more short-term downside on crosses against the yen, right? Maybe a little bit more upside for the yen in the short term. We'll see. But yeah, very, very interesting to see that. Again, get access to the tool. It is currently 50% off. We're doing our summer sale right now, and it is our biggest discount of the year to get access to our tools and data. If you're somebody looking to incorporate fundamental analysis into your trading, my company, A1 Trading, we build tools for people who are trying to incorporate macro data or the commitment of traders data, et cetera, to their trading. So take advantage. We're doing 50% off right now. Click that link and take advantage. Don't miss that discount, right? Trader Nick, are we doing casual today? I'm not sure what you mean by that, Ivan. Casual what? Let's see. What else can we talk about? So dollars up today. S&P was up. It's given back a little bit of those gains. The NASDAQ, I am long the NASDAQ. I'm also long the Dow, which just Uno reversed on us. Look at that. We were in the positive, now have come back red. So slightly red on the Dow. We're positive on the NAS. The VIX is up 4%. Silver is slightly higher. Gold slightly higher. Oil's up 1.3%. I have a sweater on. Oh, it's a shirt. It's a shirt. Hi, Nick. What is a carry trade? Could you briefly elaborate? Yes. So different central banks offer different interest rates when you hold or different base interest rates, right? The Fed has a federal funds rate of 525 to 550 basis points, which is 5.25 to 5.5%. That's the rate at which they lend out to banks, and then banks lend it out to us, right? So the central bank has a central interest rate. And so when you look at globally at different central banks, the Japanese yen has a very low interest rate. So when you see Japan with a low interest rate and the dollar with a higher interest rate offered, people go and they sell their yen and they go buy the dollar. That's been a prevailing trend for a long time here in recent years. But then recently, people start to question, what's coming next. They know that the Fed is likely to cut interest rates. They also think there might be global recession. And Japan is notably a country that has a pretty stable economy, not a super fast growing economy, but a stable to a degree economy, a pretty predictable economy. So if people are feeling concerned about the future, they may rush back to buying the yen because the yen is stable, right? It's a generally, we know what to expect with the Japanese economy. but we don't always know what to expect with European economies or the UK specifically, or like the US. Like those things can enter into, Japan can enter a recession too, but it is more predictable to some degree, at least in the eyes of the market, compared to other places. So people might be selling yen and then buying dollars to collect positive interest rate. But if they think that there's going to be a global recession, they might do the opposite. They might say, okay, I'm cashing out of those dollar positions, or US real estate, which they may have used dollars to buy. They might sell risky things and go back to the safe things. That is what is considered the carry trade unwind. So recently, the stock market sold off pretty hard. Not really hard, but we saw a little bit of a dip. And so market participants might be saying, let's be careful here and go back to the yen or sell stocks. Or another way of saying that would be, get out of just anything that is super recessionary concerned or so on and so forth, right? Maybe go into gold, things like that, the more risk off plays. That being said, there's a mixed bag here because it doesn't fully hold water. The market didn't see just a full blown risk off move, because last week we saw things like real estate, XLRE is what I'm looking for. Real estate did really well last week, which is a traditionally risk on kind of asset, right? People buy real estate and invest in real estate when things are going well, and they're scared of it when things are going bad. So a bit of a mixed sentiment in the market, it seems like. Not to mention today, you've got the NASDAQ up and the blue chip stocks, the safe ones, quote unquote, the Dow actually down. So, yeah. Anyways, top setups wise, I am still long the Dow. I've got a bullish setup on the Edge Finder that I'm watching. I am already in the trade. I entered that one last week. I'm also watching Bitcoin. I want to take a quick look at Bitcoin because I might be wanting to take a trade on Bitcoin. Let's see if we can find. So we're doing this thing that I talked about last week. I missed this one twice, which kind of stinks. I was looking at Bitcoin. I wanted to take a long position on a trade and didn't quite get the setup. But now, so I was looking for this setup and I totally missed it. To be honest, though, I saw this price action going on, but I was waiting. And I didn't get my entry. So I didn't enter this trade, even though it was beautiful entry. Bitcoin is like the ultimate risk on, in my opinion. It's a risk asset. And Bitcoin Super Bowls or Bitcoin, fanboys and girls would probably not like my statement on that. Because if you call Bitcoin a risk asset, what you're saying is it just trades directly with other risk assets, which is frustrating to true crypto believers, because if Bitcoin is really resilient, it shouldn't matter what the stock market is doing, because it should just be a store of value, right? If it's a store of value, it shouldn't be so subject to emotions of the market, right? The stock market. But it is. It's very, very sensitive to what's happening in the stock market. And generally speaking, when you see high risk stocks going up, Bitcoin's going up. When you see high risk stocks going down, you see Bitcoin going down. So I am not a crypto, ultra believer per se. I do think it has a place in the future. The technology is amazing. So I like Bitcoin, and I like the idea of having a little bit of it in my portfolio and trading it on the long side when I can. But I would not say I'm married to the idea that Bitcoin is the future. I'm not that guy, and I don't think you have to be that sort of level of a believer to trade it. So I'm looking for something like this. If you get a pullback here, I do think it has room to continue upside, and I do still stay on the risk on side of things. So that's why I mentioned with the yen, I can't really buy the yen because I'm more on the risk on side of things. I think that we're going to see going into the rest of this year during election, regardless of who becomes a president. I think that there's going to be a lot of fiscal spending. I think that there's going to be continued, tech trade revival. And I might be so wrong about this, but I don't think the tech trade's over, right? A lot of people are saying, these companies are too richly valued. They can't keep going. But I think CapEx for these big companies, right? The spending being done on the AI trade, the risk to not spending enough is greater than the risk to spending too much on the AI investment. What do I mean by that? Well, I think big companies are going to continue to spend aggressively to stay at the forefront of the tech AI stuff. That perpetual spending could end up being a big bubble, but I don't think the bubble is ready to pop if it is a bubble. Okay. What I mean by that is, again, I think that these big companies, they have so much money available to them. Apple has so much money. Google has so much money. Microsoft has so much money. So when you ask me why are you long the NASDAQ, it's because I think these companies are going to continue to pump money into the AI trade really for years and years to come. But with this recent dip, I'm a buyer because I think the tech trade is going to go a lot longer than people think it is. And if I'm wrong by that, I'm not going down with the ship. I've got to stop loss in my trade, but I think it has upside. And I don't think that, if we get a 10% pullback in the S&P 500, I will love that. If we get a 5%, which is about where we're at, right? The S&P pulled back just 5%. I'm a buyer at 5% discounts, right? Because I'm bullish and I think bull markets dips get bought. So if I'm wrong, I stop out. It's not the biggest deal. It would not be the first time I'm wrong, and it certainly will not be the last. The cool thing about trading is you get paid to be dead wrong sometimes on the long-term scale, right? Sometimes you're right, sometimes you're wrong. As long as you're making more when you're right than when you're wrong total, that's how you make money in trading. Trading is not about being right all the time. I'm not a forecaster. I'm not a crystal ball owner, is what I like to say on the channel. I am simply weighing probabilities to the best of my ability. I'm using the tools that I use on these videos every single day, the Edge Finder, and I'm doing educated guesses and managing risk appropriately. Guys, if you want access to the Edge Finder, don't miss it. We're currently doing 55% off for stream viewers. It is our biggest discount of the year right now for the Edge Finder. Get 55% off using the link being dropped in the chat. You can speak directly to our member of our team and get access to this tool. We have a good group of people. There's multiple, people on the design side, on the support team. I believe there's 9 of us total that make everything possible at A1, both in person and remote. We have an in-person office. I'm in an office in Atlanta, Georgia. We build tools for traders. And if you want access to our tools for the biggest discount of the year, send us a direct message. Don't miss it. It's ending soon. All right, guys, we're going to take a quick break. Well, we were going to take a quick break. Ivan was here and then he left. So hold on. Oh, Ivan's coming. All right, quick break, and then we'll be right back with Ivan just after this quick break. Thanking our sponsor. Stay tuned. Man, Frank, we finally made it down to the beach this year. What do you think?
I think this is a really great setup.
No, Frank, we're at the beach. We came all the way down here. What are you doing on your phone?
But check this out. It's a really great setup on gold right here.
Our Edge Finder summer sale is now live. Get 50% off all of our tools like Commitment of Traders data, economic data, and our top setups algorithm for 50+% off using the link being dropped in the chat right now or the description down below. Don't miss it. This is our biggest sale of the entire year. All right, we're back with Ivan. What's up, Ivan? How are you?
Doing all right.
Good to have you back on the show. And we've got the dollar moving higher today. The yen is all over the place. What are your thoughts on this market right now? And help me out with this. Is this market more risk on or more risk off?
Oh, good question. Is it risk off? S&P 500 down, yen stronger, dollar stronger, Swiss is stronger, New Zealand down, Aussie down.
It's kind of a mixed bag because look at what you've got. So you've got gold. Well, let's say for the last few days. So gold's been kind of flat the last few days. The S&P 500's been bouncing back up a little bit the last few days. Dow Jones bouncing up a little bit. Then you've got dollar index up the last few days at the same time. And the yen, as we just discussed, has been overall down a lot the last few days. So I don't know. Seems like kind of a mixed bag. Also, Bitcoin's up a
So-
bunch.
That was very subjective because if you take the same amount of time you just did, everything is risk off.
Hmm.
Because you said, "Oh, dollar had a dip like the past few days, but
Mhm.
in general has been falling." But it's generally risk off, generally speaking. Yeah, it has a couple of days there, but generally, yen. And I think what we have seen in front of our eyes, and I hate myself for it, the unwinding of carry trade on New Zealand and Aussie against the yen.
Really? So look at, oh my goodness, NZD/JPY really has dropped. Australian dollar against the Japanese yen has also really dropped. Are you trading either one of these?
No, I was buying it, so I haven't bought yet. But yeah. So I don't know. Maybe I should reconsider my position. But no. There is because there's a Bank of Japan meeting on Wednesday.
Mm.
Then I'll probably get more, but probably not going to happen anything either. But what is the chance at the moment that there's a slight chance of maybe a 10 basis point hike on Wednesday? But nothing that's going to rock the boat, to be honest. But it depends if they're going to do anything about the treasury bonds.
Wait, so there's a chance of a rate hike for the UK this week? What? Really?
No, the UK. Didn't we talk
Oh,
about Bank of Japan?
I thought you said Bank of England. I was like, wait, what? Yeah, I'm pretty sure they're trying to cut rates. Okay, no, that makes more sense. So we'll
No,
see. But yeah,
for Bank of England is flat. It's kind of like 60% for a rate cut, like slightly.
that's kind of what I've been seeing as well. So
Yeah,
very interesting. So the question for the yen, I guess, when we look at USD JPY is, has this chart broken? Like, is it losing its momentum that we've seen the last, few years, really? Is this the start of a bigger carry trade unwind, or is this one big buy the dip opportunity and the show goes on? What do you think?
If my ego is there, I would say it is a buy the dip. The reason for it is that they have negative growth. And if they increase interest rates now, which is 2.8, is very fragile. They don't have support in terms of wage growth so far. It's just 1.9. Like American was 4 point something at some point. So it needs to double itself for me to be, whoa, this is crazy. So I think this is just buying the dip. It's just unwind. Let's see how it goes, kind of a thing. But we are at a turning point for New Zealand. Which has everything is down. So it's just a matter of time when they will start cutting. So back to Australia, I mean, counterpart for Japanese carry trade. But I think it will still continue. But I've been surprised this time around that it has been so fast in front of my eyes. And this is the only time of the year or in my life there where you can sell the bottom and still make money.
Yeah, it's really an aggressive, move. I think that I've seen opinions all over the place with the yen, but I tend to agree with you. Like, I think that, okay, so you might make the point here that the yen is going to keep going lower, not because of Japanese growth being impressive, but because other places are going to start seeing economic, slowdown or recession. Some people would make that case because I think the case for trying to say like, oh, Japan's going to accelerate is a tough one. That's why it's been trending up so much, because we've seen, most places seeing economic growth. But with yields falling recently, take a look at here's the 10-year yield in the US. It's been trending lower recently. Here's the 2-year yield really dropping off. The market is saying, hey, we're going to see rate cuts because the economy is showing signs finally of meaningfully slowing. But the question is, if this is a buy the dip opportunity for the yen, I'm sorry, like the dollar against the yen, going long the dollar, shorting the yen. If it's a buy the dip opportunity, you're making this statement that you think that at least this would be my take on it. You're saying that you think that the global economy is slowing, but it is not going to roll over and into recession. You think it's going to just be a short-term kind of slowdown, and then rate cuts could actually lead to a bounce in economic activity and continue. So I actually think that that's probably what's going to happen. So I would agree that that's likely the case on the dollar yen, is that this is a bit of a buy the dip opportunity. And if it's not, if we enter into more of a global slowdown that is consistent and trending for a while, then the yen's going to look really strong and this chart could continue much lower. So kind of depends who you ask, but I think that rate cuts are going to lead to an acceleration globally of growth again. And so I generally would think that I would like to buy some of these dips against the yen. But that's if you're more bearish on the global outlook, buy the yen. If you're more bullish on global outlook, you might sell the yen.
It's also a relatively weakness game.
Mm.
Who is the
Yes.
weakest? So I would argue euro is pretty weak, but euro yen has dropped off the chart. But it has also now recently, but in the past, what's this year? I can't remember the exact number, but I think it's 15% up, even though euro has been cutting and has had inflation come considerably down. So we're still not down to 154, which is the 2024 level. We are now 166 on euro yen, so we're still up a lot by what do you call it, year to date.
Yeah, and that's worth mentioning. I think that, even if you look at this euro yen chart and you say this is looking bearish right now, right? Price action has at least broken down this upward, smooth as butter uptrend. We've seen a little bit of a breakdown on that, but it doesn't necessarily mean that we've entered into this long-term secular, shift in the euro yen that's going to lead. As you pointed out, you scroll out a little bit and you say, well, look at this thing on a weekly chart, and the trend is still kind of intact. I'm just putting on some simple moving averages. You can see we have been due for a bit of a pullback here. We've come back to the 20-week moving average. We may make a move down to the 50-week moving average. But I think that, as long as you stay, this trend, to your point, has been up for most of the year. And this zone, generally speaking, has been a pretty good buy the dip opportunity for some time. So we'll see if it reacts. But I generally lean towards, I don't think that the global economic situation is going to crash or really slow down. I don't see signs of that just yet, which is why I'm more positioned on the risk on side of things. But we'll see.
We'll see. What I also see is that you have a different glow to yourself. Do you have like a new light or something?
Well, stay right there. It's my headlamp. My overhead light, it's like motion sensitive sometimes. I don't know why. And so it will turn on and then mess up my lighting. So thank you for pointing that out.
No, it was positive. It wasn't negative. I was
You
like,
liked it
you
better?
look different.
I think it casts a shadow over me, makes me look, maybe if I'm like bearish, I'll turn that light on and make me look more like ominous, more scary looking. I don't know.
Yeah, because it's light from above, so you get like darker eyes or something.
Yeah, right. What else are you looking at, Ivan? Are you in any other trades or setups that you're watching outside of the yen?
Yeah, if it's look on my screen for 2 seconds. Also, what am I looking at?
Yours.
Also, Chandler. That guy did it. I don't know, somebody. I forgot to share. I thought I shared. I shared earlier. No, this is what I'm looking at. So I'm looking at when is it bullish? Not yet. So maybe on Wednesday, maybe on Friday. So we had a meeting earlier today, a couple of hours ago, with VIP webinars, and I said this is a day where you're actually just going to take a deep breath and be like, okay, cool. I can actually take my legs on the table and be like, I can relax, because this as a bull or a yen bear is nothing. And if you are shorting Aussie yen, for example, I wouldn't argue this is a good setup either. So for me, this is like a good, a good point to say, take a breathe, look at the market, leave it, and do something else. Because to me, the New Zealand's are weak, but that's a left to right situation. Yen pairs are falling
down
and
down to the right.
down to right. Sorry, English and Norwegian came in, and the dollar pairs, for that matter, are, I don't know, what is it? Was a range when I looked at it yesterday, and today it's bearish, and it fell without me. I don't know. I didn't plan for it to fall, so I'm like, cool. You do you. I'll pick you up later.
Yeah, no, I when it comes to the currency world right now, it's a bit mixed because you have the dollar showing a lot of strength right now. One thing that does look maybe more bearish is the euro, especially when we just talked about it's really getting beat up by the yen and the dollar here. European growth just not quite as impressive. And then the question is, with the UK, I wanted to just ask you about this briefly. So
Yeah.
we mentioned rate cuts for UK. I think there's like a chance in August, right? But I haven't been keeping up with it very closely. What are your thoughts on the Bank of England?
It's on Thursday. So August is 1st on Thursday.
Yeah.
Market is pricing in 60%. And I saw yesterday was 50. So, and by the end of the year, they should have cut like at least twice. So what is my opinion? Like, I feel like what happened really was they were supposed to cut in May. And then the snap election came. And then they're like, no, we can't do anything now because now there is political risk to it. So they ended up in a situation where it was less than ideal. So in my opinion, they should cut. If I remember, inflation, is it 2%? If I'm not too wrong, we can check it up. But inflation around 2%,
Yeah,
they
I think you're
should
right.
start coming down at least.
I'm going to just pull it up just so we can make sure we're on the same page. Yeah, so here's inflation for the UK. They're down to, I think, we'll see. But as you just pointed out, there's a pretty good chance that we do see a cut for the UK. And they probably should. That's 2 back-to-back reportings around 2% inflation levels for the UK. They're past their election cycle. I know that they made a whole big ordeal about trying not to make any political moves or what could be deemed as a political move to cut rates before the big election where the Labour Party took over in the UK. So, now that that's behind them, I don't see any reason why they wouldn't cut. But I guess we'll just have to see. The other thing is, Ivan, the last thing I wanted to say is that with the US, there's some people out there who are speculating that there's going to be a rate cut this week. But I don't think, well, first of all, it's the small minority think that there's a chance of a rate cut in this week's upcoming Wednesday FOMC meeting. Do you think that there's any legs to that we see a cut on Wednesday?
Did you ask Mega or something? Whatever that call over there. If anyone's going to cut this week based upon interest rates is the UK. I think inflation is still too sticky. I would argue, so I have a rule that says 2% difference between the interest rate and inflation in either direction. And we are not there, not quite there yet. Or when we are exactly. But so it should be, we are in the corner, but it's not really supported across the board in terms of all inflation numbers. So I don't think so. So.
Yeah, no, I don't think so either for the US, because here's the thing. I think that we've started to see a good slide in inflation, but really I think that the Fed will want to see, that it wasn't a fluke, that we're not just seeing, one of these before we see this again, right? And inflation year over year, I think they're probably going to want to see, let's actually see that we've really seen a stable trend in this direction. And, then I think they'll probably cut in September if that is the case. So unless something changes where we see inflation accelerate between now and then, or jobs data come in really strong, I think September rate cuts are more appropriate. But the thing about the first rate cut is once they cut rates, they probably will continue to cut rates following after that. And so, they have to be careful about when they choose to start doing that. So we'll see. If you get some between now and September, a dramatic slowing in economic data, it could lead to, faster rate cuts coming from there. But we'll have to just see what the data brings us.
Yeah, I would argue. I just wanted to say one thing about it is that we haven't seen the same drop in inflation in the US as we have seen in all the other countries that has already cut. And I would argue we've also paused, like we have kind of flattened out, which is a warning and a problem. But yes, we need more better data if that's a thing. And also, it's summer, it's July. I don't know if it's holiday in the US, but it's holiday in Norway and Europe, and Germany is probably going into summer vacation now in August. So who is going to move the market in July?
Not me.
So that's why they won't do anything in July, because they need Fed. A Fed needs market to move to a common goal of whatever the interest rate is supposed to be.
Yep, that's a good point. Well, Ivan, before we let you go, let me just mention to anybody who is hanging out and would like to find more content from Ivan, he's got his own YouTube channel. We've just dropped a link here in the chat for you if you guys want to go find Ivan there. Also, if you're a member of our Discord group, you can always send Ivan the message. He does one-on-one coaching. So whether you find him on socials or within the Discord group, you can find Ivan and you can send him a message. He does one-on-one coaching for traders. We've heard a lot of great reviews from people who have been working with them, seen a lot of improvement. So if you're looking for some one-on-one help in your trading, make sure to hit him up and subscribe to him on YouTube. Ivan, thanks for coming on the show today.
Thank you very much for having me.
All right. Have a good one, man. All right, guys. Show continues. We're going to be bringing on our next guest, Chris Pulver, here to take a look at some charts as we see, stocks a little bit higher here today. Some other things are flat, like gold, silver, flat on the day, oil really all over the place. Yields are down though. And, now it seems like the market is trying to gear up and time out. When are these rate cuts really going to start? So stay tuned. We will be right back with Chris Pulver just after this quick break.
Our summer software sale is happening right now, which means you can get the Edge Finder for 50% off. COT data, top setups, pages of fundamental and technical data, and so much more. Our software is constantly scanning for new data and information and is updated regularly. The Edge Finder is a one-time purchase, which means you can get it half off right now and never have to pay for any updates made to the Edge Finder software. This limited time offer won't be around for very long, so don't wait and get this incredible trading software for half off before it's too late. Check out the link being dropped in the chat now to talk to one of our team members about our huge 50% off summer software sale.
All right, there we go. And we're back with Chris. How'd you like that little promo, Chris?
James is looking good.
Yep, he's a good surfer. I didn't know about him until I saw the ad. So good stuff. Chris, market is all over the place. Dollars up today. NAS is up. S&P's up a little bit. Dow is slightly red. What are you looking at today?
A little bit of everything. So just a quick recap from last week. SPY was down. Well, I just had a trade close for profit. That was a little intraday strangle that I do on the SPX. That trade was 385 credit. Just closed it out for 320 debit. So grab my 15% take profit. Thumbs up on that.
Very nice.
That's a pretty steady winner. I go and track that one right now. That's a win, and it is 10:08. So quick win. Closed by 10:08 a.m. Eastern time. So I did put a couple of trades in. I know that Frank might be interested in doing some earnings plays with me. We have some big earnings this week. I think 914 companies reporting. And yeah, 914, some notables. We got some Mag 7 stocks this week, along with others. There's probably 10 or so that I'm going to likely trade on my own. I have some exposure on SoFi. I own some shares. I own some Pfizer. Starbucks would be kind of like a Nike trade. Is there going to be a consumer that's looking better, consumer that's looking worse? How does Starbucks fare? Microsoft would be a big one this week. AMD, Boeing, probably one of the worst performing stocks of the year as far as, airlines and cyclicals, and they've been in a lot of trouble. At least headline wise, have some pretty poor press. MasterCard, Health, the Consumer, Qualcomm, Meta, MicroStrategy, Coinbase. I mean, we've seen a big turnaround in crypto with Bitcoin hitting 56K back up towards 67, 68K. I know Trump this weekend had some, I guess you could maybe say pro crypto. I don't think it was articulated very well, but still it was pro crypto. And so that did give a bit of a boost to Bitcoin and other prices. So yeah, I mean, earnings week, it's a big one. We wrap up the month, we kick off a new one with FOMC on Wednesday. Nick, do you think the Fed's going to do anything surprising this week? Do you think they're going to come out with some surprise cut? Do you think that they're going to have 3 cuts by the end of the year for September, November, December? That's what the watch tool says right now. What do you think?
So I think September we see our first rate cut. I don't think we see a rate cut this week. Because I was looking at PCE on Friday. I was saying if this comes in really low, maybe there's a chance. But the PCE came in slightly hotter than expected on Friday. So I think that the Fed is probably going to say, you know what? We are seeing a lot of progress and we're getting closer, but we just need to see this last final runway before we can start the process of actually reducing the Fed funds rate, right?
Sure.
I was just saying just before you came on that once they start making those moves, they're going to want to kind of follow through with it and kind of follow the data from there. So I think they have to be careful about when they time that, because as soon as they start that, there will be, in my view, a rush for risk on assets. There will be people who are excited. They don't want to cause inflation to ramp up just by saying or just by announcing the first cut. So I think that waiting a little bit longer, let the economy just see a little bit more of a pinch per se. Let's see a little bit more round of data that's not bad, but just not great. And then I think they'll probably cut in September. So as long as we see between now and then jobs data coming in, I've mentioned on the NFP, it'd be nice to see just under 300K, but not under 200K jobs, right?
Mm-hmm.
I think if you get too light or too heavy or too high jobs, it would throw up some red flags. So let's just see if we can see the data roll in one last time, a round of data that is not threatening, but not, not inflationary either.
Right. Unemployment rate, do you think it stays at 4.1 or lower? Do you think it's going to tick up this week? That's another one, I think, as far as like the softening labor market. We don't necessarily want to see another uptick in unemployment. If the rate goes from 4.1 to 4.2, we're creeping up towards a 1% increase over the last year and a half. So definitely not a great thing. But
look at this, Chris, and you would say, is it going to tick up? Well, look at this trend on my screen really quick. I mean, this has been trending, to your point. It's been trending up. We hit 4.1. Are we going to hit 4.1 again, or is it going to be 4.2 kind of week? We'll see. But it has been trending up overall. So, the interesting thing about this week, Chris, is that we have the Fed meeting before we get the jobs data.
Correct.
So I think that's another reason why we probably won't see a cut before the jobs data, but then after but is there a possible surprise? There always is, but it would be a surprise for a reason, because I think it's,
Yeah, and also, so let's remember going into Q4 last year, market ran and ripped the way that it did, very aggressively, very bullish, anticipating 6 or 7 cuts. If you look at the watch tool, the market is still thinking with a higher probability that we have a September, November, and December rate cut. That was different. I mean, I think everyone was like September, and that's it. That's the first cut. It's 25 basis points. Doesn't change a lot. But as it stands right now, very high probability. This is. I looked at this just this morning. Let me see my screenshot here. Okay, so this was an 89.6 and 10, just at 9 o'clock this morning. So in the last hour, this has jumped. So this has gone 88. I mean, this doesn't matter, but 88.7 to 11. So somehow, is the market trying to work its way into like maybe they cut by 50 basis points in September? But even if you look at September, November, December, the higher probability for each one is that it's going to be an additional 25 basis points cut, which I think is interesting. I think that the market anticipated 6 or 7, had a harsh reality thinking it was going to be 0, and then started to price back in maybe a 1 to 2. Now we're talking 2 to 3. So It's a lot of noise at the end of the day, but this did matter to what ultimately the market is, likely going to do, likely pricing in. It's forward thinking. We got to that point where it does seem like inflation data is coming down, but to the pain points of some of the consumer elements out there. So anyway, as always, going to be interesting with plenty of data this week. So what I would say is expect volatility. I did take a couple of positions. I'm not sure what you're looking at this week in particular. I did put a couple of trades on already this morning. I'm going to give the Qs a chance to play catch up. If we have solid Mag 7 earnings this week, I'm looking to see if we can come up and try to test a gap. We've had about a 9.5% sell off, which point wise wasn't ridiculous. I mean, look, it's an all time high, so it makes sense. Like the points are going to add up and be more. But man, I mean, having a 50-point sell off in the QQQ is pretty good. That's 9.5%. All I'm looking to see is, let's say that Mag 7 comes out pretty solid by Tuesday, Wednesday. If we come up here and fill this gap at all, I'm going to take some profit. I did a 474 call. And it's out of the money, so it's pretty inexpensive. And then I'm also doing a 460 by 459 bull put spread. And I'm looking to see if price will fall a little bit, fill me around 45 cents credit per contract, and see if we can stabilize and say that, I don't think we're going to go lower necessarily than last week's low. That was a wild, wild day, by the way. When we had this gap from Tuesday to Wednesday, that gap from Tuesday to Wednesday was a monster day. I think in a given day that dropped like 28 points, which usually this moves about 12 to 13 points a day. So there was your, worst day since 2022. And there was your, snap the streak of, not having a 2% plus sell-off day. Well, that was the day. That was when things got really nasty.
Yep. And Chris, you asked in terms of positioning wise, I'm currently long the NASDAQ. I am long, just like what we did in our trading battle. I bought the NASDAQ on my account after we hit that 100-day moving average on the NAS, tagged it, bounced off it. S&P 500 tagging the 50-day moving average. I mean, we're just seeing this pullback. I said this earlier in the show, Chris, but my perspective on this is that, we've talked about game plan for this year several times about how, for me, I do think that running through the election to the end of the year and the confidence in knowing that either president that is going to be the president, either candidate that becomes president, there's going to be a lot of fiscal spending that could continue the show. And I think that the tech trade, I've been pretty vocal about it. I don't think it's over, because I think that, these companies have a ton of money and they are talking about, I've heard several CEOs, I think it was Google's CEO said that the risk to underspending is higher than the risk to overspending on AI development. Because if you lose the edge, if you lose the tech trade in any way, it could be catastrophic to your business. I mean, think of Google search, right? Google search, they can't lose, even though Google search is so big, they have direct opposition on their doorfront to getting dethroned for their Google search by all these AI things. So the risk to underspending in AI is greater than the risk to overspending. And I believe that can take us to new highs. Could it lead to a bubble? Sure. But I don't necessarily think that the bubble is quite over yet, with fiscal spending backdrop, with rate cuts on the way, with the tech trade still well alive in the mindset of these CEOs that make the decisions. I still like the tech trade, and with a 10% near discount on the NASDAQ, I'm a buyer. And if I'm wrong, I'll stop out.
Sure. Do you think that it's interesting. I mean, look at how much grief, Mark Zuckerberg was given for going into like AI or augmented reality or the VR meta space. It's like, is that going to be a sore point if it's, if the investors see it as overinvesting?
That's the thing, Chris. The bearish case, I think, that could happen is if investors at some point start demanding to see, returns that are
ROI
on this, that will be a significant shift in this. But I do think that for now, spending remains supported by these big companies that have all these cash, simply because, again, if the CEOs are kind of still very gung-ho about AI spending, at the end of the day, there's the NVIDIA, source of funds. It's these other big CEOs. They're a B2B business, right? So I don't think the trade is over. I think at some point, yes, there could be a real challenge to how much money is this going to return for us. But the technology is incredible. Someone made on my team, James, made an AI variation of me, Chris, last week, and it was so crazy good. It's so
Really?
creepy. Yeah, and I'm like, I actually could see this being a use case. Like, let's say that, let's say I like head out of town early for a weekend or something, and I
Uh-huh.
missed something I needed to say in the video for a sponsor. Let's just say
Okay. Yeah.
I could have this AI bot thing fill in the blank of the part that I missed, and then Chandler or James could put it in the video. So
That's awesome.
there's some use case. I feel
Yeah.
like I see more and more use case every day with the AI stuff.
Interesting. Well, James, send that over. I wanna pick it apart because I mean, why not? I mean, why be it live for 30, 40 hours a week when it's like, oh, well, maybe a half that time.
It is a little bit scary though when I watch
But
it.
who knows what you're gonna say? Who knows what AI is? Are they gonna get it right? Is it actually gonna sound like you? Is it gonna be going on a random tangent? Who
It
knows?
does. It does also. Well, when we watch it, Chris, we'll send you the example video. It is
Uh-huh.
crazy,
Yeah.
but it's pretty dang good. But it
Yeah.
also just flared up immediately my resumed bullishness on cybersecurity stuff because that there's just going to be my mom. I showed my mom this weekend. I said,
Uh-huh.
"Hey, this is not me. This is AI Nick," and she was like, "I don't like that. You know, you could call me and ask me for bail money." And I was like, "Exactly why cybersecurity is the future, in my opinion."
Yeah. Skynick is online. There you go.
She knew it immediately. She knew the use cases immediately. She's like, "How do we know? How can you defend AI? You know, or know that it's AI talking to you?" I'm like, "Well, software companies will develop, you know, just like how we have like firewalls that protect from viruses.
Hmm.
You're gonna
Hmm.
have anti AI that protects from AI fraud. You would hope. So
Yeah.
I think Instagram is already doing something like that, or Twitter is doing something as well. So I don't know.
Yeah,
Interesting
well, I
times.
mean, you're gonna have the AI captchas,
Yeah,
you pick out like you're gonna have to like put it's gonna be like Picasso, and you got to put your face together and make sure it's the real Nick.
yeah,
Know
really.
the details of like, oh yeah, I've got a little beauty spot right
Yeah,
here.
like
You got
right
to find
here,
that.
right
Yeah.
there. Yeah, exactly. Yeah, no, that's crazy stuff. But yeah, so we'll see. I do think that at some point, you know, these valuations are very, very high, but the capex spending from the big companies,
Mhm.
that's where it's all about, I think, going into this earnings cycle. And to your point, this is kind of the big week, right?
Yeah. This is a big week, and I think after the sell off that we saw, I mean, it makes sense to me that the market. Look, if this is going to get worse, then everything's going to have a bad week. Where the Mag Sevens, nothing's going to make any money. They're going to miss expectations, and this could be just more pain ahead. But when we take a look at the actual market itself and look at the indexes, and we've been in a pretty healthy bull market since Q4 of last year. And although this year it did feel broad, right? It was very narrow. The broad happened and was questionable in like a week because we had the big rotation like out of the Nas and into the Russell. But I look at it as this 10% haircut we just saw in the Nasdaq. There's plenty of cases where okay, so off you go, little 10% correction, 9.5%, no big deal. Now I still think that a rally can be met with some additional corrections, but if we have this, let's just talk timing for a second. If this week with the biggest companies in the world reporting earnings and it's enough to stabilize, it's right to where we talked about this. Maybe Mag 7 saves the stocks again, and we
Yep.
have like led by the best, and then trickling down into the broader. Like, look, the Dow has hung on to 2 weeks of positive gains, where the SPY's been down and the Nasdaq has been down. The Russell has clung to, a 13% gain and has dipped back just a fraction. Now it's only down like 2 or 3% off those 13% rips. So I like the fact that we've still had the Dow, the Russell hanging in there. And it's just a matter of will the SPY and the Qs resume? And so this is a big week to kind of see, can we resume broader market? Can we resume with the bigger leaders that continue to do their thing and lead the way? But I do ask, are we going to see high low push up here for the near term? And then are we going to be debating on, whether this goes up or down? Because the timing right now, Nick, is kind of strange. Like it's
Yeah.
July, we're kicking off, August here. We have Jackson Hole and earnings. That's pretty much all that we have in August. And then September is historically a terrible month for stocks. It underperforms. It's usually bearish. But October, December, Q4, everyone gets excited about it. There's certainly open interest levels. There's gamma squeezes. There's all sorts of stuff that there's reason Q4 rips the way that it does with the seasonality, and you throw an election on top of that. So there's no shortage of volatility ahead. It's just, are we going to see more of the same, or
Yeah.
are we going to see a big disruption? So I think, at least for right now, I'm pretty confident that earnings will be close to consensus.
Yeah.
I think they're going to be decent. I guess I wonder from like this week, 914 companies, is it, 905 or 6 or 7 that have terrible earnings and then, less than 10 that have great earnings? That's what I
Yeah.
don't want to see, right? I
It'll
want
be
to see broader
interesting.
earnings that are pretty healthy.
Yeah, and in terms of just a couple points that you made, I wanted to follow up just with some charts to show. So that seasonality that you mentioned about September, just so you guys may have heard Chris mention that. So September,
Yep.
especially in the last 10 years, which is this calculation, it's been a negative year, right? September's not been a very, I'm sorry, month, right? It's been a negative month for September, not very positive. By the way, October also about flat in the last 10 years. So what you can see here is that we are still in the sweet spot, at least of this portion of the year, July and August. Positive expectancy there relative to September, which is negative. So we might have like maybe a little bit squeeze, a little bit of a pop back up. And then, if seasonality takes its turn, you might see September modestly lower, sideways, or, maybe even a bigger down trend. And then, as you mentioned, that fourth quarter rally, I think it's not coincidental, as you were saying, that you get this lull period. And as many investors or traders know, a lot of times, your outsized returns come following outsized sell-offs. So you get big sell-offs that usually causes big bounce backs. That's why they always say, if you ever look at like the last 20 years, the best singular days were like all in 2008. Like there were so many 2008 days. The best singular days were in that absolute carnage year. So something to think about. But anyways, the other thing you mentioned, I just want to talk about personally, like some positioning. I mentioned I'm long the NASDAQ, but I am also long the Dow. I bought the Dow last week. And the thought process here is I think we are actually closing in on the rate cut stuff. And I think that having a little value in the portfolio, nothing wrong with that when we look into, historically speaking, the value stocks hold up a little bit better into rate cuts in most environments. So I think that that's a little bit of it's not a hedge because it's still long stock, so it has exposure to a sell-off. But I think I like the Dow names. You had 3M like blast off last week.
They
I
crushed
saw
it last
that.
week. Yeah.
Yeah, so I think you're seeing a little bit of a rotation into safer stuff, right? Industrials, maybe there's something about the election there as well, but I think the bigger theme is probably the rate cuts, right? Rate cuts could lead to, hey, the economy is showing signs of slowing. Maybe you want to go into value stuff with predictable earnings. Maybe the Nasdaq, but I also, again, I specifically traded the Qs, not like QQQE, which is like an equal weight, because I like those big names, the dominating AI stuff. So that's kind of where I'm at. I'm on like the two ends of the spectrum. I've got like a bell curve here on indexes. I'm long the Qs and I'm long DIA.
Yeah. Well, I'm long the DIA and IWM. I just got long the Qs and the SPY. So,
So you got
last
a little everything.
yeah.
Nice.
So I mean, a little bit everything, but with also both ways, right? Like last week, I had broken wing butterflies and the NDX SPX that paid out really nicely. I think it was like almost $5 a credit that I collected. It was a trade that took about 2 to 3 weeks to do. This week, I mean, I'm taking a chance on the Qs. I'm trying to get filled at a 460 level, which right now, if I show this, the 460, if I go QQQ, and I'm sitting in Qs pending. Okay, so it's trading for 32 cents right now. I'm trying to get filled for 45 cents. So I need price to drop a little bit, see if we can maybe come in and retest. I mean, I say lows, but I looked at this morning. I'm like, man, we're all the way down to 456. This thing's going to drop $9 or $10 to retest the lows. But 460 to me is kind of good enough. Like we test that round number. I'm giving this the rest of the week. So I'm curious if we, for the week, maybe use this as a bit of a bounce. We come in and actually, try to find this gap, maybe fill the gap. But it's funny, like compressing this chart, this is actually a long ways away. Like to get back and fill this gap, this is historically what the market does on an entire week. It's like if we just get back to here, that's an average weekly trading range that's right around average. Last week was so beyond that. We finally had like that big, kind of 1.5 to 2 standard deviation move, which we haven't seen in a long time. So, one of the worst weeks since 2022 in October. That was right before we had a bottom. So again, that doesn't mean anything. But look, it's just trading. You're long the Qs, you're long the Dow. I think that's great. My Russell trades are hanging in there. Hopefully we'll continue to show some resiliency. I need price to stay above 218 in the interim just to give me a few bucks on some credit spreads. I've got some out of the money plays like 240 and 245 if we test all-time highs. Those should be 3, 4, 500% gains on the Russell positions that I've taken for like the longer term out to the end of the year. I know that you're still long on TLT, I'm assuming, yes?
Yep. TLT staying in the portfolio.
Yep.
For now.
Okay. Still long on TLT. Excellent. I also want to take a quick look at Bitcoin with UTLTs looking pretty solid. BTC trading up to 68 and change. I do wonder. I mean, you got to wonder, like, where's Bitcoin by the end of the year? If we have a, for an election, U.S. election, I saw a comment comes in that says, I highly doubt the Fed will lower rates in September. I think you'd be surprised. I think the Fed's already talking about cutting rates. I think if anything, the biggest surprise would be they don't cut rates. That would really piss off the market, in my opinion.
Well, and look at the other thing to mention about Jerome Powell's track record of sticking to his word is pretty good. I mean, he even now you might say, well, what about when he said transitory? I'm not saying he's always right. I'm saying that his word is pretty accurate, and even, he came out and said that was a mistake later on. Jerome Powell has been pretty clear about where they're at in his meetings. Yes, he speaks a little bit political, where he's just kind of like soft on both sides of the mandate all the time. But generally speaking, they've stuck to their plan. They've been pretty transparent about what they want to do and when they want to do it for the most part. I mean, remember, as we just talked about, like the market was thinking, 6 rate cuts at the beginning of the year. The Fed plotted out at the beginning of this year 3, right? So they've been, to some degree, a little bit more on the middle ground than obviously the market. The market is always a little bit more optimistic. Stock market and the bond market's always a little bit more pessimistic. But I do think that one thing that they've said over and over when asked, are you going to do something in September because that's going to be political? He says the same thing every single time. He basically says that they don't make their decisions based on politics because, and then he also makes a point, like, it's publicly available to go track their, audited behind closed doors conversations through the meeting minutes, right? So you can go look and there's no mention of politics. And you might speculate maybe more on the conspiracy side of, well, yes, they do. And maybe there's a point also that they are human beings. So there is some bias involved in any human being making decisions, but at least in the professional setting, they seem to be making their decisions based on the economic data. And we can only, trust that they do their job. And that's a bipartisan thing. It's not a Republican or Democratic, setup. Both parties like having a independent Federal Reserve. And I think most people think that that's the right way to do it. It shouldn't be leaning one way or, I think it was like Nixon that had a ton of calls. He had like a record number of phone calls with the chairman of the Federal Reserve at the time. And, but
is that because they broke away from gold?
They probably, and they tracked, I think they tracked the number of phone calls that happened between the president and the chairman, which I think is a really interesting indicator. But I think it's usually pretty low. So, well,
that's it. Fed for president. I'll say that. That'll be my middle.
I think Jerome Powell should just be like our tyrant leader. He just take over.
They're pretty much the most powerful entity the U.S. has anyway.
Yeah, right. Yeah, really. I mean, at the end of the day, I think that they're the one to watch. I've said that recently. Like, everybody's so fixated on the drama of the election, but what's the Fed going to do? That is really the money printer. The money's pumping in, or it's not. That's
exactly
that's the reality.
On that note, so dollar index, I think this is another thing to watch very closely for the foreseeable future. Certainly the next couple of months, just for some key levels here. I mean, I have not enjoyed a lot of the indecision on dollar pairs individually for Forex trading, but I have looked at the dollar index as, okay, we keep holding this 104 level. Okay. We have this 105.50 to 105.60 resistance. So I've got resistance up here. I have support down here. And I do wonder, so we're likely going to see the Bank of England cutting rates. We've seen the ECB cut rates, the Bank of Canada cut rates. We've had some dovish meetings out of the RBNZ, RBA, but they haven't cut rates yet. You got to wonder if, last week's really big decline in the yen cross, some of the Swiss strength as well. I for one don't necessarily think that the carry trade is unraveling to the fullest extent, but it was at least a sign of how aggressive an unwinding can be. So, I do think that watching the dollar, if the market's going to run a bearish campaign against the dollar because of rate cuts that are cutting or rate cuts that are coming and more rate cuts that are coming into 2025, I just have to see a nice clean break below 104, 103.90. We break, we come back and get rejected, and then we're looking for lower highs and lower lows. Nick, you and I talked about this. This is another reason I could see the stock market staying positive on the year, because we would see weaker dollar. That's another reason we could have. I would say decent earnings are going to be they'll be fine. I don't know if they're going to be gangbusters, awesome earnings, but they could be fine and acceptable, right? But a rate cut cycle that the market's going to start running with, the dollar could really be what is hit hard. And again, it could be, the dollar became the whatever, the cleanest dirty shirt in the laundry, so to speak, or whatever type of analogies you see. It's like it's the lesser of all evils. Like, all these central banks are cutting rates, but the dollar, the Fed's the last one to cut, and so it hung in there the longest. But if the market really makes a run on the dollar, you do have to wonder, like, what does that mean for risk appetite? And I think that these anti-dollar plays could be solid. So, I like our plays again on Bitcoin. I like our plays on silver. I like our plays on gold. I mean, gold is hanging in there pretty stable. Silver, I mean, surprisingly, silver is doing pretty poorly. Like, I thought silver would hang in there with this support around 28.60. It did break, and at this point, silver to me has to bounce off of 26 to show that it's going to stabilize and maybe be bullish once again. But gold is hanging in there. Silver's giving a little bit more back. Bitcoin is hanging in there, but we have MicroStrategy this week. So anyway, I mean, certainly watch the dollar. The yen was interesting. We had 1,000+ pips on most of the yen crosses last week. Pretty wild stuff, man.
Yeah, and that's the thing with silver and copper and all the industrials, they're getting sold off because maybe the same reason the yen is up, right? A little bit of global concerns about growth. But I do kind of still think that looming rate cut for the U.S. Will probably pump some growth into the system again. So, if silver keeps pulling back, it might be a longer term decent entry for some longs, but we'll keep an eye on it. Chris, I'm going to let you take over the show here for a little bit, and you've got it from here. But before I do, let me just mention to everybody who's hanging out with us, Chris has got his own YouTube channel. We just dropped a link to that, Chris Pulver Trading. If you're watching on Twitter right now, it's at Real Chris Pulver. You can keep up to date with him. He also does some coaching. He does some one-on-one stuff. He does all sorts of stuff. He has a Discord channel. So make sure to go follow him on his socials, and you can find all the links to what he offers there for you. So, Chris, you got the show for a little bit, man. Thanks for taking over.
All right. Thanks, Nick.
All right, man. See ya.
See you soon. Yep. Bye-bye. All right, everybody. So requests can come on in. Let me know what you want to see. We'll take a look at, I'll just do my little poll report here, my top down. So S&P, NASDAQ, the Dow, the Russell, volatility. I'm glad I took some profit last week on volatility. We poked up here towards around $19 and change. I had a 10.50 long call and I had a $20 out of the money long call. I closed out both for profit, which I'm happy that I did. This is again, it's a very jumpy instrument. We've seen some of the lowest volatility on record, outside of maybe some of those eerily low volatility years like we had back in the 90s, and 2017 was one in the near term that comes to mind. But glad that I took some profit since we did revert over 19 back to 17. So anyway, it was a little hedge play. Now my hedges are mostly in futures, so ES and NQ. MES and MNQ. Those are, E-mini futures as well as the micros. Let's see here. Nimmer, you asking what's the deal with Pound New Zealand? Yeah, man. Look, these pairs have been really interesting. They have moved in a big way. A lot of this kind of risk off flow has certainly affected the Aussie New Zealand have been underperforming in a big way. I am interested in looking for some resistance to form. So Euro Aussie looking to see if we turn back bearish. Euro New Zealand looking to see if we turn back bearish. Pound Aussie, Pound New Zealand, same thing. The issue is, and this is what's nice about just putting on some simple indicators on the chart, I don't see a reason to be short yet, right? If I let me bring up some charts here, and I'll go into one of my workspaces that I use. Let's go here. Okay. So let's go into the pound crosses, pound Aussie. Okay. So just this little run right here. So I wanted to be long. Here's my measured symmetry. So I'm looking for a short opportunity on the pound Aussie. We had a low to high. I was looking at this as a potential, head and shoulders. We got the breakout point. We measured our move. We were long on the pound Aussie. We had our measure move to symmetry. I mean, I would say that worked out pretty well, right? Now, does that mean that I automatically want to short this? Well, if this is 1, pullback correction 2, push for 3, look, wave 4 to wave 5 could still be up here. I don't want to force a sell position without having some better confirmation. So I would say if we come back up to 2.0, this is pound Aussie. If we come up to 2.0, and then I'm going to look for some high divergence levels, so that means price is going higher, momentum disagrees, then sure, maybe look for a topping pattern in price. But the first thing for me right now is going to be, if these indicators don't show bearish, I'm not going to force a sell trade. So for me, it's going to be 2.0 or looking for a topping pattern up at 2.0 on the pound Aussie, or I will wait patiently for a bit more of a confirmation to then turn red and see a bit of a pullback in case this is potentially range bound. But it seemed like this was on the move for some type of destination, and it did work out. Symmetry's right there. So if you look left on the chart, here's pound Aussie. Everybody can see resistance right here. That would be my next level of resistance. So I'm hoping that you're not shorting this move when we've been looking at this as a bullish trade and we just hit symmetry, right? So symmetry is good. Now I want to see if there's another nudge to the upside. If we hit 2000, watching this level, then looking for turns to the downside. So that's pound Aussie. Pound New Zealand is, I would say similar, but man, this thing has been way beyond. This is another move that we talked about in my trading room. We had this head and shoulders, left shoulder, head to neckline, right shoulder. I'm not going to lie, it got a little messy, right? So we have this low to high pullback here. We got long and we hit this 18127. We took some profit. In this area, once we started to get a breakout, I looked for a pullback and I looked for an equal low. I wanted to buy there and I wanted to buy there. I never got those entries. And of course, once this thing was moving, you can see here that you essentially go from 209 to 219. You go up 1,000 pips with no flipping pullback at all. Like this thing was just straight up on a mission to destination 2.19. So that's for a trade that was anticipated, a direction that was anticipated. Man, what a slippery entrance that was. So I didn't get a chance to participate in the pound New Zealand like I wanted to. Yes, we hit our targets, we hit our 618, we hit our resistance levels at 2.15, but it blew through those levels. So to my point, I'm looking at the same thing here. I'm not trying to force a sell trade unless this thing gives me a topping pattern. Look at some price action first. Don't just try to force yourself into a trade. If there's no confirmation on these indicators, I mean, look, it turns red, it stays red, right? If it turns red, there's a chance it stays red with confirmation. That's a lot easier trade than trying to short it here around 215, 216, and now you're upside down 300 pips. And now you're wondering, begging, hoping that it comes back for you. That's not a position to ever be in. I hate that position, right? I hope this turns around. I need this to turn around. That's not good. So are they likely? Are they lined up? Have we had some big moves on them? Yes. But those are also higher volatility currency pairs. Take a look at the Aussie dollar. It's been all over the place. The dollar initially was getting beat up a little bit. Aussie looked pretty promising, and that quickly turned on a dime. We get up to 6,800. We dropped to 6,500, a 300 pip drop on the Aussie dollar. Now it looks like it's positioned to be the other way. So take this high to low. We pull back here. Is the dollar going to get stronger and the Aussie get weaker? I don't know. Maybe. But I still think what makes this Aussie dollar a good looking trade? Dollar weakness. Do I have dollar weakness confirmation? No. If the dollar gets back below, so let's say DXY. If the DXY is less than 104, then I think this trade is, better to the upside. But if the dollar index is above 104, then this is either more downside, more dollar strength, more resiliency, and we're gonna have to wait and see if the Aussie and some of those risk-on currency pairs catch a bid at a later point. If you look left on this chart, I'd say that if you are trading this direction, there's profit potential there to the downside and here. But once we come into this area, I'm very interested in looking for a bottom to form and looking to trade Aussie dollar longer term up. Well, longer term in the sense that if I'm trading dollar and dollar weakness is confirming, I think dollar weakness is a great trade. I would love to see a trade where the dollar, as we mentioned earlier, I'd love to see the dollar actually give me a decent breakout one way or the other. I want to see the dollar go somewhere else, not stay in this garbage zone. I want to see the dollar go here. I want to see the dollar go here. That to me is easier trading, more profit opportunity. As far as like having directional runs, right? If the dollar's going to move several hundred pips, it's going to be in the open spaces. It's not going to be in here with these little choppy, 50 to 100 pip range trades in these channels. We want to see some open space on the dollar pairs. Okay. All right. Curzon says Aussie CAD's the best pair ever. I don't disagree with that. I think Aussie CAD's one of my favorites. It's one of my favorite efficiency pairs to trade for sure. Okay. Okay, so we're good on the dollar there. Gold and silver, sure. Pound dollar, yes. Okay, fine. So let's do this. Let's go dollar crosses. So Aussie dollar, I just did. Okay. Aussie dollar, like I said, I'm just not real convinced this could be something along these lines with the dollar, the Aussie dollar. A lot of indecision. So, again, if the dollar index is nasty and indecisive, why would the Aussie dollar be easy to trade? It's not. So what I'm looking for is a break in a run or a break in a run. And I don't think that's going to happen anytime soon. Okay. It's going to be so obvious when it finally shows, oh, wow, the Aussie dollar is way up here. Then you're going to feel like an idiot trying to buy it high, but that might be the breakout trade, right? Or trying to sell it low. That might be the breakout trade. But you got to wait for confirmation. I'm not trying to get dollar position into here when I don't know what direction it wants to go. So I don't like the Aussie dollar right now. The euro dollar, probably my least favorite. Of all the dollar crosses, euro dollar sucks. Why? Look at it. It's in the middle of all this garbage. So is it here? Is it here? Is it DXY? It's indecisive. Do we break and go higher? Do we break and go lower? There's an argument that the Fed is better suited for, yes, cutting rates, but a healthier economy than the Eurozone. Well, if that's the case, does this mean that the euro from this giant sell-off, and we pulled back about 38 to 50%, does this mean that the euro is going to come back down and retest parity? That the euro is going to come back down and retest, below parity at 95 or 96? I don't know. I don't know. So what do I watch for on the euro dollar? I watch the DXY. It's the heavy weight in it anyway. About 45 or 50% of the DXY is weighted in euro. So if you want to trade the DXY, trade the euro dollar. I don't like the DXY, therefore I don't like the euro dollar. Make sense? So I'm waiting for some more obvious open space to trade the dollar. Then I'll have a trade on the euro. Okay, pound dollar. Pound dollar is going to have some volatility this week. We do have the Bank of England on Thursday. This one's been another one. Look at all these fake out trades, right? So I had this yellow box in here early in the year. Fake out, fake out, fake out, fake out, fake out. I mean, come on, man. What's this thing trying to do? I don't know, right? So I'm not trading it. I'm not over trading the dollar. I'm not guessing on the dollar. I'm waiting for the DXY to give us a nice clean direction and hopefully go with that. All right. So pound dollar, 3,000 resistance. It continues to hold for right now. Could this be in a range? Yeah, I suppose. Could we have, the pound dollar up here with resistance and down here at support? Absolutely. Maybe it gets up here and then we break this trend line and then the pound dollar drops. Well, I thought the dollar's going to get cut. I thought the dollar's going to get weaker. Well, the Bank of England might cut rates on Thursday, and all of a sudden they're going to start cutting rates aggressively as well. Who knows? But to me, that trade makes sense. If it turns earlier, let's say we don't get up and retest 3,100. Well, if it just starts dropping from here, takes out this low, perhaps there's a swing trade to the downside, and there's your stop loss. I mean, I'll assess it as I'm given the trade. I'll be objective, but that's about what I'm watching in the pound dollar. Okay, New Zealand dollar. Kiwi's been one of the worst performing currencies. We had a nice trade here. We sold at 60.90. It's trading at 58.59. We took our profit, 5,900 or lower. That trade is done. So nice trade. I mean, overall, we got in even despite the dollar. So dollar CAD is a really nice trade for profit that we're still running with right now. Or we protected. I think I protected maybe last week. I can double check. And then New Zealand dollar protecting profits well below 59. So nice little run there for 200 pips or so. And how much lower? Well, I don't know. How much lower? Does it go all the way back down to this low? Maybe. How about these lows? Well, if it came back down to this low at 56, way more interested in buying the New Zealand dollar. Okay. And to that point, let's say that this is a crown pattern and a reversal pattern, right? The New Zealand dollar, if we see this support level hold, okay, or if we see this support level hold, there is so much potential upside on the New Zealand dollar based on a pattern trade. You take, this low to this high up here. If all this is doing is impulse, correction, and then another impulse, and we finish a 5-way move, we could be talking about this thing at 7,000 plus. If I line this trade, again, I'm not trading it right now. I'm not positioned for it now. Right now, I'm out of this trade for profit. My next position on the New Zealand dollar would be trying to buy it around 56. I buy it around 56. So if it comes all the way down here, I'm going to buy it, take it back into this, pockets and efficiencies, see if we have a bullish pattern. We get back above 62, measure move up here. You got a pocket up here at 66. You got resistance all the way up here at 73 or 74. That's a big trade opportunity. But how does it set up? Dollar has to cooperate. Okay, China has to find some footing and find some stability. China is going to be a big influence on health. The Chinese economy is going to have a direct influence on whether the Kiwi and the Aussie are going to be resilient and strong, in my opinion. Okay, so I like it. I really do. It's just a matter of, do we get the trade that we want? So I will set right here, look for some support right around this 50. I'll just go 5,600 there. So if we find that level, pretty interesting looking at support to buy from. It has been falling aggressively and inefficiently. So if we zoom in, okay, if we zoom in on this pair, New Zealand dollar, I mean, that's a lot of days in a row. I'm not going to lie. Like, that is a very aggressive, very determined bear move on the New Zealand dollar. So am I catching the falling knife right now? No. Am I calling the bottom right now? No. So what I'll do instead is I'd like to see this. We drop aggressively, okay? Let's say we pull back a little bit, drop a little bit more. It's at these levels I'll start looking for lows to form and then start trading it back up. So it's not ready yet. But if we come to 57 or 56, I'm interested in taking a couple stabs at it. Okay. All right, that's New Zealand dollar. Dollar CAD. Dollar CAD up towards 38.60. We took profit in my trading room around 3,800, 3,840, right back to this previous high. And happy that we did another one that, setting up for a potential drop could be this resistance and this resistance. Again, I wouldn't just automatically assume that this dollar CAD is going to drop. Okay, why? Bank of Canada, Canadian economy, maybe worse for wear compared to the U.S. I mean, I know a lot of smart people that are talking about, the CAD getting weaker and weaker and weaker, the BOC cutting rates, needing to cut rates. And why is that? Because they potentially have a variable housing crisis coming in the next 1 to 2 years. They don't do fixed mortgages. US, we're lucky. We do 30-year fixed mortgages. Your rate stays the same. People still refinance like crazy. But in Canada, every 5 years, you're basically forced on a variable rate to restructure. If you have a rate of 1% that's now going to be 5%, that's a terrible mortgage, and that happens. So that's going to be 2025 and 2026 for Canada. I could see the BOC having to do some pretty extreme, monetary policy to, lessen the blow from that type of, mortgage community. That's tough. I mean, can you imagine that? I mean, if you're in the U.S. with a 3% interest rate and you're happy to 30-year fixed, and all of a sudden your 3% interest rate goes to 6 or 7, that changes a lot on your month to month, doesn't it? So this is about 30%. 30% of Canadian mortgages are in this variable pile, and that could definitely weigh on the Canadian economy. So what I'm saying is, if I have resistance, okay, and we see confirmation, then looking at a sell trade, and it could be a range trade from 140 back down to 130, 131. Awesome trade. Stop loss and reward is way favorable. It's a great trade, right? But if I don't see it, what I don't want to do is call a top and all of a sudden this thing's breaking resistance and then going up here to where we had these highs back during COVID, which would be 145. This is also a range of 132 to 140, about 800 pips. Okay. And if we break at 140, could we get up to 147, 148? Very possible. We could have this measured move all the way up here. Absolutely. So without confirmation, I'm not calling tops to bottoms here. Dollar Swiss. I still like dollar Swiss. I'm long. To me, this is a bullish opportunity. This is an anti-Swiss play. This is a Swiss basket trade. Left shoulder, head to neckline. All this is right shoulder. I'm looking to see, where and if I can add to this and add to my winners. So patience on that dollar Swiss. Dollar yen. I wouldn't be surprised to see a little bit of stability here at these lows. We dropped about 1,000 pips. Just look at a simple swing. High, low, do we pull back to a 3.0, 3.82, 5.0 pullback? If so, the short-term confirmation to the upside could help out some traders. And then we'll see what this kind of carry trade or unwinding of the carry trade is made of. If it's high, low, and then we have a lower high, do we sell off again? Well, if that's the case, look for confirmation, get your stop losses in, stop above, and scalp your alignments. And would that do really well for the markets? Probably not. Right? If we see another leg lower on the Japanese yen, and we see a leg lower on the Nikkei, which is your Japanese index, right? I mean, this thing is also shed. I mean, we talk about the Nasdaq shedding, 9.5%. The Nikkei is down 11% in the last couple of weeks. That's not nothing, right? Like that's a pretty healthy sell-off. We're now back down below. These were the all-time highs from 1989. It was all exciting that we got there. We had one more move to the upside. I think that, what do we see on the Nikkei? If there's, I mean, are we going to do this? I don't know. Maybe. I think if the Nikkei is going to have any chance of going higher, it's going to be with weaker yen. If the Nikkei is going to see a dump to the downside and give a lot back, that's going to be unfortunate. But the Japanese yen is probably going to be the beneficiary of that. So it's still a good currency pair to monitor and watch. But I know it's going to be slippery and it's going to be a little wild to trade. But you can also hedge. I mean, I showed that last week in the trading battle with Nick and I was basically doing pairs trades on the yen crosses. I'm long the euro yen, short the pound yen, or vice versa. Long the Aussie yen, short the New Zealand yen, or vice versa. Like one pair is going to win, hopefully. One pair is going to lose. Let my winner be bigger. That makes me some money. That's one way to do it. So it sucks to know that like one trade is going to lose, but if your winners run to 1.5 or 2 times, you walk away with some profit, and you don't have to pick a direction. You know that one side is hopefully going to be the move, right? So. All right. If interest rates lower or higher, what happened to currency, that country, inflation rate? I mean, in just modern history, I mean, I'm not talking extremes of like, oh, back in, what did Argentina do, or what did Turkey do, or what are these like crazy hyperinflation situations? I mean, look, we don't know, right? I mean, interest rates that we've seen. I mean, look, you can look at the Fed funds rate. Okay, you can look at the Fed funds rate and think about what the market has done. So this Fed funds rate goes back to 1954. Now, was I trading in 1954? Do I know what the economy did? Can I speak on that like I could the last 20 plus years? Probably not. Okay. But since, having some exposure in like, okay, what the 80s do, what the 80s look like, what the 90s look like to the 2000s, I've been trading since 2000. So what I do know is we are in some really interesting kind of unprecedented territory where, we go from zero, and what happens here? Interest rates go up. What happened during that period? Okay, we started to raise rates in 17, 18, 19. This was not an easy period for the market. 2017 was the most low volatility, but every single month was up. It was a brutal grind to the upside. And this was all at the backdrop of the Fed actually raising rates. 2018, the market tanked hard in December for like 20%. 2019, the Fed backstop picked right up. 2019 started to rally again, carry us into all-time highs into 2020. You put a bow tie on top of that divergence, call it COVID. We sell off a ton of COVID. We go to emergency cuts, bazooka stimulus around the world, and we slash rates to zero. Well, we go from extreme of zero back up to 5 and change to tame inflation, inverted yield curve, longest in history. So, I mean, none of this stuff is like, oh, we've seen it before. I mean, we have comparisons, but we don't have a cookie cutter thing of how this is going to play out. I still am very cautious moving forward once we get out of this inverted yield curve. I think with the Fed, I think the Fed is normalizing, right? I don't think they're necessarily they're not going full dovish, right? They're not slashing rates to zero unless we have something worse happen. But I would say normalizing. If the Fed goes from 0 to 5.5 and cuts it to like 3, you're kind of at this compromise. Is it restrictive enough? Is inflation getting better? If we have 2% inflation and the Fed funds rate at 3%, is that restrictive? You could say sure. On paper, sure, right? Savers can still save, right? Investors can still invest. Having the 60-40 bond portfolio or 60-40 split between equities and bonds, is that a good portfolio? Maybe. You could argue no, but I don't know. I don't think that, it just seems like, can we keep just faking our way through all-time highs? Probably not. If we get our valuation stretch, and it doesn't have to be overcomplicated, right? The markets will tend to correct on certain things. So if the valuations are ridiculously frothy, the market will correct. If we are in an aggressive tightening cycle, the market will correct. If the Fed is not nearly as accommodative, the market will correct. If the government is not spending money, the market will correct. So fiscal, monetary, and earnings and interest rates, like those are really the catalyst for what's going to drive the market. Okay. Interest rates are coming from restricted levels coming down to be less restrictive. Earnings have been fairly solid. Valuations are pretty high, but not necessarily uncharted territory. The Fed is cutting rates, which is showing a little bit more accommodation, but the government, as they have been for the last 4 years, has been very accommodative, lots of fiscal spending, which is what's really carried the length of this bull market since COVID recovery. But those are the main drivers of what's going to be like your big highs, your big lows, what type of cycles we deal with in the markets. Okay. All right. My question is currency, week strong. Oh man, we got to go, James.
Yeah, it's 11 and we got another guest coming on.
All right. No worries, dude.
All right. Well, thank you for coming on, Chris. I know that we'll see you, I think every day this week. I think you're here Monday through Friday this week. Is that right?
So I signed up for.
All right. Well, guys, if you enjoyed Chris, be sure to come back the rest of the week because he streams with us every day from 10 to 11. Chris, thanks for coming on today. And we are going to be right back after a quick break. We've got one more guest today. It's Forex James. So yeah, we'll be right back right after this.
Thanks.
If you're someone watching the show right now and you're outside of the US looking for a better brokerage, listen up. I wanted to take a moment to mention today's live stream supporter, Vantage. Vantage allows traders outside of the United States to trade CFDs. You can trade everything from commodities like gold, you can trade US indices or global indices, and you can even trade FX all under one brokerage, and you can connect to MetaTrader 4 and trade directly on tradingview.com. Not to mention, they also have a really good sign-up bonus going on right now. So we'll drop the link to that down below in the chat as well as in the description of this live stream. Check out Vantage. Now back to the show.
Hello guys. How is everyone doing? Let me just mute my camera. There we go. Hope you're all doing well. So it's been interesting month in July. I've had a lot of portfolio fluctuations in terms of realized P&L. However, on the bright side, it's looking up. We might be able to close the month with some profit, which is nice. So first trade I have open is gold. Now, initially, I took this position here. So we had a strong move to the downside. I shorted the majority of this initial downside move here. Tried to take a long position, just a very small position here. You can see it was a negative 0.1% loss. So very, very minor after a 1% gain. And then decided to go back in for some short positions, just trying to catch the short-term momentum here. However, as soon as I entered, we had, a very small amount of profit and then came right back up into drawdown. Now, this is a good lesson in understanding your strategy and the way you trade and sort of just not listening to other people necessarily and more focusing on, what works for you. So if any of you guys listen to my content or, watch me at all, really, you'll know I use fibs heavily. It's one of the main factors of my strategy. So I knew this entry was early. I knew it was very aggressive. So I was more than prepared to potentially sort of DCA this and add in again. Now, I do have a hard stop. You can see my stop level is here. So if we draw the fib from the high, which is here, to the low, right here, we have the 50% level right through here at the whereas this the 22,392. Now we saw these wicks formed here. We saw a lot of rejection around this area. So this was a very clear lower high that was getting formed after a 50%, at a 50% pullback. So I scaled in again. So it's currently just sat in gold. It's roughly break even now, considering both entries or both positions. So that's fine. So looking to take gold lower. To where exactly, I'm not too sure. To be honest, I'd be happy to cut profits down at the lows right here where the fib is, just to sort of get out, obviously close the month out with a relatively flat portfolio. So I put out a watch list yesterday on my channel, on my YouTube channel. I covered the euro pound. I'll go into some economics shortly. I'll just show you the trades first. So euro pound, I'm currently short again off the 50%. Off the fib level here. We have the golden zone, which was tested very, very aggressively and rejected even more aggressively this morning. So once we saw the bearish 4-hour candle close, I was happy to jump into this, and I'm taking it down to the fib extension down here at 0.83. So very simple trade, really, to be honest. I know the chart looks a little bit messy, but that's just because I've got, my supports drawn up and things. But overall, very simple. Basically just a trend following play with a pullback and some economics to back it. And again, I'll cover the economics in a minute. Now the dollar Swiss, again, this one is actually kind of a no-brainer trade, especially looking at it on paper. I mean, I could be eating my words this time next week. It might just go and hit stop loss. But right now it makes lots of sense to be long on the dollar Swiss. And NASDAQ is currently playing around. So again, this NASDAQ position is more of a starter. This isn't a short-term position. This is a long-term position with a very, very wide stop and very, very low risk. So I took this on my personal account at, I think it was roughly 0.2% risk for this whole position. And the idea is just to get into the market, feel it out, see how it moves over the next sort of 1 to 2 weeks. And then maybe I'll scale in again. But mainly I'm waiting for the NVIDIA earnings sort of in mid-August. And then we can see how NVIDIA comes out, and then maybe I'll scale in again. But until then, I'm not too interested in trading NASDAQ aggressively because obviously NVIDIA is a huge part of NASDAQ at the moment. So in terms of economics, this is something I want to show you. And I don't really show this very often. However, I've started to, so I'll show it on the stream as well. So every Sunday, I collect the bank reports from elite traders, and I essentially read them and say, okay, well, what is, what's currently moving the markets? What might move the markets in the very near future? I list them all here. So you see the pound, the dollar, the euro, the NOK, Australian dollar, Swiss, yen, the SEK, CAD, and New Zealand and gold. And then I basically list them. Is it neutral? Does it sound bullish? Is this, the text bearish? What is the sentiment of the article I've just written out here? And then I can use this to then pair and say, okay, well, what are good trades according to my economic roadmap for sort of the next 1 to 2 weeks? So you can see here, I've got euro dollar short. Now, again, I was on this stream. Well, I'm on the stream quite often, but for the past maybe 1 to 2 weeks, I've been saying I'm bearish on euro dollar. And basically the whole, everyone in chat was saying that they're bullish. Euro dollar's bullish. And look at euro dollar now. And again, if you just take a moment and step away from the charts and look more towards the economics, it would have been quite clear that euro dollar could be heading down. It was quite likely. So you can see here the euro could weaken due to ongoing political risks in Europe, particularly if there is a contagion of other fiscally weak Eurozone members. The ECB is expected to remain more dovish than the Fed, and potential global risk aversion due to US political and geopolitical risks could enhance the appeal of the USD. So euro dollar Swiss, euro pound. Again, I'm in both of these positions. And waiting for some of the others to present some potential entries. But yeah, this is a very simple approach. This didn't take very long. It takes me maybe half an hour to an hour every Sunday. I just sit down, read, write it out. So I've got it on hand. and put it together to find some potential trade ideas. And I can then pair that with something like the Edge Finder. Use code ELITE for Edge Finder, by the way. Little plug there. So yeah, that's it for active positions. Gold is moving pretty nicely. I know we all like to talk about gold. Just catching up with chat. You can feel free to ask me questions, by the way, guys. I might sound a bit stuffy today. It's quite hot in the UK. I've got, hay fevers or pollen's kicking my ass today. Went for a run this morning without taking my allergy tablets. So that was a great idea. I had about 4 hours sleep as well last night. So not feeling the best today, but, money doesn't sleep. So we've got to get on the charts. So the New Zealand dollar looks actually bearish. I mean, I don't think there's any arguing that the New Zealand dollar is bearish. However, I am looking for a short-term play to the upside. Now, again, I'm just going to refer to the roadmap here so we can see, while the New Zealand economy is facing a double-dip recession and softening labor market, the move to neutral weather conditions from El Nino is positive for the New Zealand. Although China's weak growth weighs on the New Zealand's exports, the overall outlook could support a moderate recovery. So it's not necessarily right to say that I'm bullish on this market. It's more a case of I'm looking for a very small correction. So this would be a short-term counter-trend trade, and this is something I very rarely do. I very, very rarely trade against the trend. However, we've had an aggressive move to the downside. As I just said, we could see a potential recovery or a very small recovery. So in this situation, I may try and trade it back up to a 50% level, and then I'd close out and just let, I don't care what happens after that because I'm out of my position. Now, this could go completely wrong. So this is a very high risk trade, and it's not something I am super comfortable with. But if it fits with the way I trade, I'll take it, possibly just at a lower risk, because I use variable risk. It's not always a set percentage or monetary amount. So we'll see about that. However, again, I've been saying for the past couple of weeks, I'm looking for a stronger dollar. Now we are starting to see a stronger dollar. The issue is, where will we see the dollar start to slow down? Your guess is as good as mine. But we could see it, come up to this 50% level, start slowing down, and come plummeting down. I don't know. We'll just have to monitor this. But we could see the dollar come back up and retest this previous high, and that would be ideal for me for what I want to see in the markets. But again, we will see. We do have rate cuts coming. And another thing, actually, I need to mention is going back to the euro dollar. The reason people were so bearish on the euro dollar is because they were saying there's rate cuts coming, there's rate cuts coming. However, that's a very simple way of thinking. I don't mean that as an insult. I just mean that in terms of it's only looking at the dollar, and it's just very linear. So the ECB is more dovish than the Fed. So that is in favor for a bearish euro dollar. The rate cuts in the US are essentially already priced in. So if we do get the expected rate cuts in sort of September through December, it's not necessarily a shock to the market. So we may see a bearish dollar, but it's not going to be, or I would be surprised if it really affects the dollar in a huge way. So we'll see. But yeah, I am still looking to go short euro dollar. I would just like to see a pullback. And actually, we did see this move here that I possibly could have gotten into. Actually, no, I couldn't. Sorry, I'm measuring it from the new low, so I wouldn't have gotten in there. But yeah, I'm looking for the credit agricole target. So this is, you can see I've had this marked up for weeks now. I don't have the article on hand at the moment, but this is the credit agricole target for the at the end of the year, essentially. So sort of December, which is the 1.05 level. So that's where I'm looking to close out of euro dollar by the end of the year. So we'll see about that. Thoughts on gold sell? Well, CJ, considering that I'm in gold sells, I think that should give you the idea. But in terms of why I'm short gold, essentially just looking at the way the market's moved previously. So I made a video on this. Again, I don't want to keep trying to self-promote, but on my channel I made a breakdown of this, but I can go through it here. So if we look back in April of this year, we created a all-time high right here. Then what happened? We saw a pullback. Then we saw a move to the upside, didn't create a new high, all-time high, and then we came down to this level of support. We did exactly the same thing. And the reason I'm calling it a bull trap is because it's essentially a reverse pullback. So we didn't create a new all-time high, and it is a pullback, but it's in the opposite direction. So it can't really be a pullback in an uptrend if the pullback is bullish, if that makes sense. So this would have been where buyers are trying to get back in to potentially get new all-time highs. So yeah, we saw the move to the downside. We saw exactly the same thing a second time when new all-time highs were formed. We saw the pullback down, bull trap, then pull back down to support. Now we've created all-time highs again, seen the same setup. We had the move to the downside, then the potential bull trap, and now I'm looking for this fade to the downside back into this level of support. So it's essentially what happened last time we were at all-time highs. What happened the last time we were at all-time highs? Well, the same thing happened twice. So playing the game of, what happens, then it's likely we'll see the same thing again. We also have, a lot of profit taken in gold. So it's not necessarily that I'm a bear on gold. I think, you know what? It's mixed, actually. I've seen a lot of different institutions say different things. There are some institutions saying that gold can head back down to sort of the 1900s. And then there's, I think it's Citibank that expect gold to hit 3,000. I mean, I'm not sure I agree with that one. However, I do foresee gold heading to the upside. I'm not sure we'll create new all-time highs by the end of the year. I'm not sure. We may possibly do that. The only chance I really see that happening is when we head into the elections, the US elections in November. But if we don't create new all-time highs then, I don't really see it happening, at least until 2025. And then we'll see what new problems arise in the world. I'm sure there'll be another war. There's always some sort of war starting at some point. So we'll see. CJ, no problem whatsoever. I hope that made sense. Thoughts on, we can have a look at the pound CAD in a second. I thought someone was asking about NASDAQ, but maybe I missed that, or maybe I'm seeing things. Maybe it's sleep deprivation. I don't know. So pound CAD, for sure. Yeah, I mean, the pound is clearly doing very well for itself. Now, again, I'm going to refer back to my sheet, and this is to give you guys some clarity. If I can find it, give me a second. There we go. Why is that? I've lost it. For some reason, it's not opening. But yeah, so pound is doing very well for itself. The Canadian dollar's very weak, clearly. So I think, if we're swing trading, we're following the trend, then it makes sense to be looking for long positions. In terms of an entry, I'd be looking, for the way I find entries, which is looking for a 50% pullback or a pullback into this sort of golden zone, which I've got marked up, which is between the 50% pullback and the 0.618 pullback. So I'd be looking for something along these lines. Now I'm just going to extend this a little bit. Something like this. Now, what this zone allows, the reason I extended it above my 50% level, is just to allow for this high. So this could act as a level of support. So we could see this act as sort of a break and a retest. Now, I don't really see that as likely, but I want to account for it anyway. I always want to be prepared. And again, we've also got this high down here that could be relevant. I don't know yet. But we'll see. Now, I don't really see why the market would drop down to this level, to be honest. I think if it was going to, it probably already would have done. So for now, I'd be staying out. But if we do see a substantial pullback sort of down to the 200 moving average or a 50% move, then I'd be looking to buy. But at the moment, I'd be sitting on my hands. Francis, hello, good to see you. Can we long NAS? I don't know. If you can open a position on NAS, then I'm sure your broker won't have a problem with that. Sorry, give me 1 sec. My Excel sheets decided to open. So Bitcoin, is it a good long position? I can give you a outlook on Bitcoin from a technical view, but as I always say, I'm not a crypto trader. I'm actually very disconnected from the crypto world. It's not my forte whatsoever. So the only way I would really look at Bitcoins on the daily, to be honest, actually, this is looking a little bit bearish just because of the price action. If we look, we've had quite a strong rejection of this daily resistance right here. And today's candle will actually be quite important. If the daily candle or today's candle can close below the previous daily candle, let's say here, for example, that would be quite a strong indication for me to potentially look to go short. No, I wouldn't short, again, because this isn't my market. I don't know enough about it to actually start placing trades. But I would be looking for something like this, and this is the daily time frame, so I'm not sure how realistic this is. I know Bitcoin likes to be a little bit tricky when it comes to price action sometimes. But yeah, I'd be looking for something like this if we can get a daily candle close below sort of at the 66,000 level or 66,700 level. So Amul, I think that's how you say your name. Sorry if I butchered your name. To go back to your question about can you long NASDAQ? The answer is I don't know. So I am in a long position on NASDAQ. This is purely a speculative gamble, essentially. It's a very, very low risk position with a very wide stop. And this is essentially just to test the waters and see if we can start moving up on NASDAQ. Because I'm not super confident yet, that's why I'm not in a more short-term position with 1% risk, 2% risk. I'm happy to sit in this position until we get the Nvidia earnings, and until then, I don't really think I'll be placing any more trades on NASDAQ. And that way, if things start working out for NASDAQ, we do start seeing bullish moves, I can always scale in. So I'd reduce this stop to potentially somewhere around here. I could add in with the rest of my risk. So, for example, if I'm taking this at 0.2%, then I can add in at 0.8 or 1.8, depending on how I'm feeling about the market. And then if it drops down, I could, if I'm still looking to go long, if I'm still happy with the data behind the NASDAQ, I can always, again, scale in here because I have no problem adding into drawdown trades if I'm confident enough, like I did with gold. So let me just see. Australian dollar actually looked interesting. Last time I checked, it was looking quite nice, but I've not checked it in a few minutes. Here we go. Okay. So yeah, essentially, I would like to go short on the Australian dollar. I'd be looking for 2 entries essentially. So I really don't like this one. I've got it marked up because I was tempted to take it, but it just wasn't strong enough. It didn't feel right to take this one, and that's just going off discretion. If I was following the strategy properly as I normally would, then this second position is the likely one, looking for this 50% pullback right here, and this does line up with the previous sort of lows, this consolidation. So this looks like the most optimal entry in my opinion. However, the reason I was looking at this one is because it's a break and retest, and I really like a break and retest. It's along with the fib, the break and retest is like the second confirmation for me. It's one of my favorite things. So you can see we've got this level throughout here at the 0.65. We broke through, we've come back up and retested. The issue is normally I actually would take this. I would have no issue taking it normally. The reason I've not taken it is because we've had a pretty heavy sell-off already. And I think price is due for a pullback. I think we're way too overextended at the moment. I think selling now would be trying to catch a falling knife or whatever that saying is. So I'm just going to delete that and look for this 50% pullback up here. And we'll see if we can get that one. Where to find information that affects the strength of a currency that you show us, and what do you think of pound yen? So it's a good question. So if you're wanting to get into economics and data, there's a few ways you can do it. So I can show you this. So I use this site quite often. It's just investing.com. It's free. Anyone can get access to this. You can go onto the news tab. You can filter it by, Forex, commodities, stocks, whatever you want. and then you can get headlines of different things. But if you want more sort of advanced things by institutions, then you'll need to get access to bank reports, which unfortunately aren't public. We do have them in our Discord, but yeah, it's not something you can just go out and get, unfortunately. You could also use the Edge Finder, of course. So the reason I like to use bank reports and articles and things and then go to the Edge Finder is because I get my long-term outlook. I get sort of the forecast from the articles and bank reports and those things. Then I get the current data from Edge Finder. So let's say, for example, let me get rid of this. So AUD USD, let's just say, for example, the forecast was bullish. And again, let me just clarify, this is an example. This isn't a real situation. Let's say that the Australian dollar is bullish, or the forecast is bullish, sorry, from what I've read and researched. However, the market's currently moving down and Edge Finder says that this is bearish. That tells me that, okay, so the forecast is bullish, so I am looking to buy. However, right now isn't the right time. I need to wait for some sort of catalyst to change. So Edge Finder will update to a bullish market. Then I can get the best entry possible by combining the two things. So I have the current data from Edge Finder, and I have my current, short to midterm forecast. Please a trade, but I don't have money to trade here. Please, can someone tell me what's going on? I'm a little bit confused, to be honest. Shmura, I can't pronounce your name, to be honest. I'm sorry. I don't mean to be rude. But essentially, we're going over some markets, trade ideas. We're going over some economics and data and things, discussing the markets in general. If you don't have money to trade, just open a demo account. Just have a play around. Don't put any money on the line. See what you can come up with. And then, do some research, start learning, watch YouTube videos, read some articles, maybe get mentorship if you're serious about it and you enjoy the first few stages of sort of the learning process, and take it from there. But yeah, guys, I think that's it, to be honest. There's nothing else on my watch list. It's pretty quiet. Like I said, I'm sort of wrapping up for the month in terms of my portfolio. Just to recap, I have a short position on the Euro Pound. I have a long position on the dollar Swiss. I have a very long-term position on NASDAQ, and I'm currently short on gold. But yeah, that's it. So that's it. Zen, you want to cover the dollar Swiss? I've already covered the dollar Swiss. I'm currently in a long position. You can feel free to rewind. I explain why I'm in that position. But again, I'm going to wrap up now. So I appreciate you all joining. It's a little bit of a shorter segment from my part, so apologies about that. But like I said, hay fever's got to me, very little sleep, so don't want to start going off on tangents and things. Don't think that would be helpful for anyone. So enjoy your days, enjoy your weeks. I'm not sure if I'm on this week, but I'm away next week. So if I don't see you in the next 2 weeks, I'll be back after that. So yeah, see you soon. Thank you for having me, and you're always a great chat to talk to.
Thanks for tuning in to today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. Also, we're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. In the live stream chat and description below, we'll drop a link to apply to be a live stream guest and join in on the conversation. We hope to have you on soon. That's all for today. Trade safe, and we'll see you next time.